Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KARRIE INT'L interim report. KARRIE International Holdings Limited offers a diverse range of businesses and services across various industries. The company's key offerings include manufacturing and selling metal, plastic, and electronic products, mechanical engineering solutions, metal and plastic parts, including molds and relevant products for the ICT industry, magnetic tape data, storage point-of-sale systems, computer peripherals, server casings, office automation products, visual accessories, metal stamping dies, plastic injection molds management services, property holding. These businesses and services are provided across multiple regions, including Hong Kong, Japan, mainland China, Asia, North America, and Western Europe. KARRIE International Holdings Limited S stock price has skyrocketed by 211.54% to 249% over the past year due to several key news events. The company's confirmation as a supplier for NVIDIA servers was a significant catalyst, leading to notable stock surges in November 2025. Additionally, KARRIE International reported robust financial growth for its fiscal year 2025, with an 11% increase in revenue and a 21% rise in profit. Brokerage initiations, including CSC Financials, buy rating, also contributed to the stock price increase. Furthermore, the company's strong profitability and capital management strategies, such as share repurchases and increased interim dividends, have positively impacted its stock performance. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the expansion into new markets through strategic acquisition and merger, growing demand for AI-related products and services, and increased orders from existing international brand clients. Additionally, the company's server enclosures business, EV charger enclosures segment, and storage products segment have also contributed to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in interim dividend per share, resulting in a 40% reduction from $50 to $50. Net income and profit margins overview. The company's net income has experienced fluctuations over the past periods. Initially, it decreased by $53 from $101,779 to $101,726. However, in a later period, it increased significantly by $44,617 compared to the previous period. Additionally, there was an increase of $3,894 from $117,139 to $121,033. Profit margins have also undergone changes. The gross profit margin and operating profit margin both saw increases, rising from 13.2% to 14.3% and 8.9% to 10.6%, respectively. Conversely, the net income margin decreased slightly from 8.1% to 8%. Notably, the metal and plastic business experienced a substantial increase in operating profit margin by 4 percentage points to 23%, while the EV charger enclosures and other products saw a decrease of 6 percentage points to 16%. The company's financial performance indicates a consistent generation of positive operating cash flow. The reported figures for 30 September 2025 and 31 March 2025 show an increase in operating cash flow from $1,102,819 to $1,234,119, demonstrating the company's ability to generate sufficient funds from its core operations. This trend suggests a stable financial position, allowing the company to invest in growth opportunities or repay debts. The company's debt level has experienced significant growth in recent periods. Current bank borrowings have surged by 26.6%, while total bank borrowings have increased from $536.2 million to $606.4 million. Net interest-bearing borrowings and interest-bearing bank borrowings have also seen substantial rises, indicating a notable increase in the company's debt obligations. However, despite this rise in debt levels, interest expenses have actually decreased, dropping from $830,000 to $430,000. This suggests that the company may be benefiting from more favorable interest rates or terms on its loans, offsetting the increased borrowing costs associated with higher debt levels. The company's financial performance varied across different segments and regions. Notably, server enclosures and AI and storage products were standout performers, generating significant revenue and operating profits in both periods. In contrast, EV charger products struggled, with declining revenue and operating profit margins. The others segment was inconsistent, with unclear revenue figures and a notable loss on page 9. Management's outlook on company strategy. The company management is optimistic about the company's financial health, stating that it will maintain a strong liquidity position and have sufficient resources to meet both current and future funding needs. Additionally, they plan to adjust selling prices of products with customers in response to renminbi exchange rate fluctuations, indicating a proactive approach to managing external market factors. There were no notable acquisitions or divestitures in the company's financial activities. This indicates a stable and conservative approach to business expansion and restructuring. The lack of significant transactions suggests that the company is focusing on organic growth and internal development rather than external mergers and acquisitions. The company has a history of paying dividends to its shareholders. In fact, it is explicitly stated that the company has paid dividends as mentioned on page 17. Furthermore, in addition to paying dividends, the company also declared an interim dividend per share of 1.5 HK cents, which represents a decrease of -40% from the previous year. Concerns about inventory buildup and supply chain disruption. There are valid concerns about inventory buildup and supply chain disruption in the company's financial summary. Specifically, a decrease of $83,086 in revenue from external customers for server enclosures raises questions about inventory levels and potential overstocking. Additionally, the lack of provided data on inventory and gross profit for EV charger and other products suggests that there may be issues with managing these product lines, potentially leading to supply chain disruptions. That concludes the financial summary for KARRIE INT'L. Feel free to comment below, and I will be happy to answer them when possible.